supposedly Tesla stock will drop even further. At least that is when you look at the head and shoulders that are forming. You guys liked this video, so we're gonna dig just a little bit deeper here. So specifically, we are going to talk about head and shoulders, and unlike what the image would suggest, this is not just for men. Head and shoulders usually indicate, this is from technical analysis, usually they indicate a reversal or a shift from bullish sentiment to a bearish sentiment. Just to be clear, I'm not selling any of my Tesla stock. If you watch this channel, you know I only have Tesla stock in my stock portfolio. I will tell you in a moment why this is completely irrelevant, but I just want to show you this because it's also entertaining, and you also have to know what the bears are going to say before they say it, so that you have a good counter argument that actually makes sense. Because if you are an investor, you always want to look for the opposite of what you think. If you think Tesla stock will go up, you'll find every reason why it might go down. And then if you can't find any, then you may want to keep your stock. Of course, not financial advice. And no, today we are not going to be talking the reason why you should keep, or why I am keeping Tesla stock is FSD, full self-driving. Of course, that is the big reason, but I'll give you another one today, which we haven't really talked about much on the channel recently, not at all actually. So let me just go through this quickly. So see how right here there's a little bit of what you would call a shoulder, and in technical analysis usually nothing is ever really perfect, but you know you can look and you can sort of see the patterns. I used to trade forex in the past, by the way, just for fun, not with actual, well, I did trade some of my money too, but just very little. Nothing significant, but I enjoy nerdy things like this. So I thought I would share this with you because you guys liked the last analysis quite a bit. So you can see a bit of a head right here, and then you can see another shoulder forming right here. So if I draw this red line where I did, if you can see this one, it's not perfect. So, but you could make an argument, hey, look, there's a shoulder forming here around this level. These are the shoulders, and right here is the head. And if it goes below this level, then you could make an argument that there's going to be quite a trend downwards. Now, based on technical analysis, which I never make my long-term trades on, by the way, but if you would base it on that, then would you expect to buy again? How much would it drop? Well, you would expect it to drop as much as it is high from at the highest level to this around this line right here. So that would be a lot. So if I take this line right here, and then if I just drag it down, so we're gonna take this one and drag it down, and you would see, supposedly, it would go down to 0. Now, I never make my long-term trades based on technical analysis, but I just think it's fun to look at. But, you know, it could indicate something. But here's the thing. I want to play this short clip from most recent interview that Dave Lee has just done.
Some people are thinking that, you know, if Tesla's going to grow deliveries 50% every year, that their earnings will grow 50%. But if we look at Tesla's financials, there seems to be, you know, something different going on. But Tesla's able to grow their earnings far faster than they are their deliveries or their revenue numbers. Can you explain to people what's going on here? Why is Tesla able to grow their earnings so fast? Let's say even 100% or even more per year.
You see, no technical analysis can beat earnings. Earnings is what I really like about Tesla. And then James went on to answer this question by saying, this is happening because of the operating leverage, increasing margins, because the first factory in California, in Fremont, that is the least efficient factory that Tesla has right now. That was basically leftovers from the joint venture of GM and Toyota, and all the equipment that they left before was basically just broken, all run down, horrible. So the margins are increasing as Tesla is implementing new manufacturing technologies as well, such as gigacastings. They cast the rear in just one piece, same with the front. And now they're implementing structural battery packs as well, 4680s, and so much more. They're even removing those ultrasonic sensors, which the actual sensors are pretty cheap, but the wiring and the time and the effort that goes into making that labor costs, and also the extra time, when you think about how long it takes to make one vehicle, you want that to take the least amount of time possible. So that time is also being reduced because of little things like that. There's many more, just little things like that. And I thought this chart was pretty interesting that shows how Tesla makes its average $1 of revenue. As you can see, most of it comes from automotive sales, excluding regulatory credits. And then in the yellowish color right here, if you look 2022, you see that is not a significant portion of revenue anymore. It is a somewhat significant portion of profit still, but it becomes less and less and less and less significant. And interesting to see also other sources of revenue. Another takeaway from that interview, James analyzed, we know that Euro completely crashed this year to a point where at $1 is now worth more than €1. That hasn't happened in a very long time. Last time it happened was 2 decades ago, and everyone seemed to be worried that this will hurt Tesla's profits because you sell a lot of vehicles outside of the US, right? So if you sell to a European market, you will get paid in euros, not in dollars. So when you bring those euros here to the US, or when you report your profits are going to be less, not because you made less, but because the currency got weaker. And that includes many other currencies as well. Dollar just got stronger this year. So James calculated what happened, and let me play this clip.
And I ran it all the way through.
Yeah, what's the impact then?
At the gross margin impact line, it was $0 of impact. The cost of sales came down by as much as the revenue came down by. So it's good to know that both of those are going to be lower, maybe $500 million lower.
So for me, it's fun to speculate what is going to happen here based on technical analysis and all that, but it has zero impact basically on my decision making on buying or keeping the stock really. I just look at the long-term numbers, and then if I like the stock, if I think that the price is fair and that I will have a decent return, then I'm in, I'm buying. Stocks trading long-term, it's more than just technical analysis. It's about how well will the company be doing in the future. And for Tesla, FSD and the earnings, I think even without FSD, the earnings are looking good. I like what I see. Now, of course, if macro crashes, S&P 500 crashes more, then of course that will affect Tesla. But I just don't want to take the risk of FSD potentially being solved this year, next year, or a year later, suddenly out of sort of nowhere, and then missing on a doubling, tripling, quadrupling, or even more. I just don't want to take that chance, because long term, I have a deep conviction that Tesla stock will do extremely well. I'm going to hold it for many years. So I'm not worried if my current holdings are going to drop. If you are about to retire, that might be something, different to consider. And you should manage your portfolio based on that. But I went into Tesla stock knowing that it's an extremely volatile stock, and I don't see any reason to be panicking here or to be afraid of anything. I'm just more excited that I can load up at lower prices. So this whole macro environment is presenting a big opportunity for me to buy more. So I'm going to try to buy a few $100,000 worth of Tesla shares by the end of this year. Hopefully the stock doesn't go up too much until then. You're always also welcome to leave video ideas in the comments below. I can't promise that I will read all the comments, but I have an assistant who will go through all of those, and then if there's anything of interest, then we will consider. If you do see, however, me replying to the comments, or if you see me liking the comments, that's always from me. That's not from my assistant. I will also be making a video why I'm not trading my properties into real estate. So I am all in Tesla stock with my stock portfolio, but I'm not trading my properties to go deeper into Tesla stock, although I might reconsider putting additional funds from those properties towards Tesla stock if the stock keeps going down, because this is the sale of the year, and the sale just keeps getting better and better and better and better. Why do I only own Tesla stock? I give 48 reasons in this video right here. My name is Matt Posius. Thank you for watching this video. See you in the next one.